This is Nightly Business Report with Tyler Matheson and Susie Garrett. Funded in part by
TheStreet.com and Action Alerts Plus, where Jim Cramer and fellow portfolio manager Stephanie Link share their investment strategies, stock picks, and market insights. You can learn more at TheStreet.com/NBR.
Hey diddle diddle, and the Dow jumps over the moon. The big blue chip barometer rockets 421 points today, 709 in 2 days. Can you trust this rally? What's next for stocks? Don't blame me. Russia's Putin targets the West and falling oil for his country's economic woes. Jeff Cutmore reports from Moscow on how long Putin thinks the troubles will last. And Sony blinks. The studio pulls the movie The Interview before it's even released, caving to hacker threats. Julia Borston tells how the decision is going down in Hollywood. All that and more tonight on Nightly Business Report for Thursday, December 18th. Good evening, everyone, and welcome. Susie Garrett has the night off. Well, no one seems willing to say it, at least not in so many words, but stock investors have acted over the past 2 days as if the Federal Reserve set off an all-clear siren yesterday. That's when it said it would be patient about raising interest rates. Well, patient is not what investors were today. They hit the gas early and never looked back, sending the Dow up more than 400 points. The rally accelerated into the close, and when the bell sounded, stocks had notched not just their best day of the year, but the biggest point gain since November 2011. Here's the final tally. The Dow up 421. That makes the two-day gain more than 700 points, or 4.2%. The Nasdaq up 104, and the S&P jumped 48. Oil had a whipsaw session, meantime, on conflicting sentiment after Saudi Arabia's oil minister said the current slump in prices was, quote, temporary. Domestic crude fell more than 4% today at 54.11, and a fresh 5.5-year low, by the way. Brent crude fell nearly $2. It settled below 60 at 59.27. That's the lowest since May of 2009. So, can you trust this rally? And if so, where can you put your money to work now? John Manley has some answers. He's chief equity strategist at Wells Fargo Funds. John, welcome back. So, can I trust this rally?
Yes. I think you can trust the Fed. It's the full faith and credit of the United States. When the Fed pushes money towards the economy, it flows through us, and you get these sort of beach ball markets where you try and push it under and it pops right back up.
So what was wrong there over the first part of this month? I mean, it almost reminds me, John, a little bit of October. The first half of October was very bad, and then right on the 15th, the market starts to shoot up. First part of December, the same thing.
I was wrong, too. I thought it was going to have a little more pressure before it came back, but I think I was being too cute at the end of it because the power of the Federal Reserve, the power to push money across, and the fact that earnings are still fine, I think is driving the market. The fundamentals are good, and I think you really have to look at it as if every bit of weakness you see, and they'll come, but every bit of weakness you see is more of a buying opportunity than not.
Until the Fed really slams on the brakes, right?
Exactly, and you're drawing a very good distinction there. The Fed raising interest rates at the beginning is not really tightening. It's them acknowledging it's a stronger economy, and stronger economies can handle higher interest rates. They're really just trying to keep the stimulus constant in the face of a better economy, and that's still good for the equity market.
So I looked at the S&P 500 today, and I think it was 475 stocks were in the green. But which sectors do you think are the ones where I could most profitably put money to work today for, let's say, the next 12 months?
I think the technology sector is a pretty good place to be. Now, it's pretty broad-based, but I think it's technology companies selling technology to other companies. I think the financial sector has been held back by a while. I think they're in reasonably good valuations. You should have strong fundamentals. Actually, higher short-term rates without a tightening Fed's very good for financials. And I like the industrial stocks. And I should mention, I'd buy some of the big oil companies, the big multinationals on weakness. They're not really that crude sensitive.
No, not so you draw a distinction there, but there's energy. Just as there's tech and then there's tech, there's energy and then there's energy, and presumably some of the bigger multinationals are well positioned to ride out this cut in the price of oil. Let's talk a little bit about Europe. Is it too early to put some money to work there?
I'd rather be too early than too late. I think there's some real opportunities there. I think what happens in a value play is you wait for the reason the value came to be. You wait for the thing that made it cheap to go away, and then you buy. And Europe's been cheap for a couple of years, but it's been cheap because you didn't have any offsetting monetary or quantitative pressure for the fiscal restraint. Now you're starting to see that. So I think you start buying, and you buy over the next several months and next several quarters if you have to. But I think they're following our lead. They're behind us. You're getting a chance to do it all over again.
You know, I look at my funds and I see that my emerging market funds have not been doing very well. Should I expect them to turn? And if so, what's the best way to play the emerging markets?
Well, I think the emerging markets, you want something that hopefully pays you a little bit while you're waiting, because you may have to wait for a while. I try to avoid predicting the future whenever possible, but I think somewhere within the next 3 to 5 years, both the fundamentals and the sentiment are going to be better on emerging markets because they're so bad right now. I don't know when. So I take a position in my portfolio. I take enough where if I take a little bit, but I have some, so I don't kick myself in 5 years, but I don't have that much at risk right now.
Just something to set away, forget about it, and wait for it to work if and when it does. John Manley, thanks.
Thank you.
John Manley with Wells Fargo Funds. Well, the U.S. is not the only place where stocks took off today. They did too in Russia, up about 5%, as the ruble stabilized, at least for today. This as President Vladimir Putin met the media in his annual press conference. He took a defiant tone toward the West. He blamed it not only for fomenting instability in Ukraine, but for visiting sanctions on the Russian economy. He warned his countrymen to be ready for 2 years of economic trouble. Jeff Cutmore has more from Moscow.
Right from the start of his speech, the president focused on the economy and said there will be growth of about 0.6% in 2014, but he acknowledged the economy is set to slow going forward. He said that was down partly to external factors like the sanctions and the fact that the oil price was coming down. Let's listen to how he described the current state of the economy.
I do not think I could call the situation the crisis, or you may call it whatever you want. But I believe that I said quite clearly that the central bank and the government on the whole are acting correctly.
He talked there about the central bank, and as we know, the bank has been aggressively intervening with that hike in interest rates and putting money into the currency markets. So the president broadly said he was supportive of the way the government has reacted to these current problems here in Russia. On the Ukraine, he pointed the finger at Washington and the West more broadly and said it has been responsible for escalating the crisis, and he said the West doesn't seem to understand Russia's security concerns.
Our bear should relax and sit quietly, eating honey instead of hunting animals. Maybe then they will leave the bear alone, but they won't do that. They want to chain the bear, take out its fangs and its claws. This is how nuclear deterrence is working at the moment. If they take out the bear's fangs and claws, it will be useless. It will just be a stuffed animal. What we're trying to do is maintain our sovereignty and independence.
In spite of the at times defiant tone, the president said Moscow is interested in a political solution to scale back the crisis in Ukraine, and he intends to speak with Petro Poroshenko, the president of Ukraine, in coming days. For Nightly Business Report, Jeff Cutmore here in Moscow.
Vivid imagery from Mr. Putin indeed. And meantime, just today, General Motors announced that it is slamming the brakes on deliveries of new cars to dealers in Russia. This because the ruble there has fallen so hard, so quickly, that auto prices in the country are skyrocketing. Well, moving now to the latest in Cuba after yesterday's stunner that the U.S. and Cuba will normalize diplomatic relations and permit freer travel and trade. Now, both big and small businesses from the U.S. and inside Cuba are gearing up to compete in a whole new economic marketplace. Michelle Caruso-Cabrera is in Havana.
Here in Cuba, a muted reaction to the announcement made simultaneously by President Obama in the U.S. and by the leader of Cuba, Raul Castro. Here, we won't see any major rallies where thousands are bussed in from across the country to sit at the city center and listen to hours worth of speeches, something we perhaps would have seen in the past. But we did see last night a small celebration by university students who were pro-government and were happy about the return of Cuban spies who have been imprisoned in the United States. Cubans here telling me today that they're hoping that the changes announced will lead to a better economy in Cuba. It desperately needs it. It's been devastated by socialist policies and by almost complete control of the economy by the government. They're also hoping that it means families won't be so divided like they have in the past by this policy. Many Cubans have escaped through the decades in order to get to the United States. And the changes announced yesterday, they hope, will lead to being able to see family members more easily and more often. For Nightly Business Report, Michelle Caruso Cabrera.
Still ahead, Dow component Nike reports a jump in sales, but there may be some questions about its future growth. We'll take you inside the company's earnings after this. Earnings out after the closing bell from the footwear and apparel giant Nike, and after sales shot up 15% in the latest quarter. The company did post a profit of 74 cents a share, excluding items that topped forecasts by about 4 cents. Revenues also did beat Wall Street forecasts, reaching nearly $7.4 billion. Shares initially lower in late trading on concerns about future growth. You can see them graphically portrayed there. Mary Thompson joins me now with more on Nike. You've looked at the numbers, Mary. How'd they do? What did they say about the future? What's the takeaway?
Well, you know, as you pointed out, the numbers, the bottom and top line were good, but analysts focus on this future growth number, and it's not an exact measure of what revenue will be in the future, but it gives investors a guideline. 11% is what they are estimating, 11% future growth. That was below estimates. It was also the slowest growth rate in 4 quarters. So that's what's pressuring the stock. What's behind that? Some weakness in the emerging markets, specifically inventory issues in Mexico and Brazil, and of course the volatility in Brazil's economy. Those are both headwinds for it going into the current quarter. On the plus side, though, strong future growth in North America, its largest market, and a big increase in China, which has been a turnaround story for Nike. So there's some good news to take out from that as well.
Just fine.
He is, and those shoes are doing well too.
And they're expensive.
Yes.
All right, I'll have them under the tree for you.
Okay.
All right, Mary Thompson, thanks a lot. Shares of Dunkin' Brands got buttercreamed in today's session, and that is where we begin tonight's market focus. The parent of Dunkin' Donuts issued weak earnings and sales guidance for 2015. Its outlook for same-store sales also trailed previous estimates. It blamed slow sales of packaged coffee in restaurants for that disappointing forecast. Now, shares were off by about 7%. They finished the day at 43.05. Some management changes to tell you about at Kraft Foods, and they sent the stock higher. The company's CEO is retiring later this month, and its chairman will replace him as the Velveeta maker tries to accelerate its growth. Shares popped more than 6% today to 63.38. And higher prescription drug sales helped Rite Aid increase its third-quarter profit. On that, the drugstore chain hiked its full-year earnings forecast. The stock closed at $6.78. That's about a 12% move today. Strong numbers and a strong market helping there. Accenture also out with a better revenue forecast after it posted strong first-quarter results. The consulting and outsourcing company lowered its earnings guidance for the year because of higher foreign exchange headwinds, but investors overlooked that. Shares were up $4.44 to $89.74. Winnebago was one stock that did not participate in today's rally, and there weren't many. The motorhomes maker reported a weaker than expected first-quarter profit as a shortage of workers at a key Iowa plant hurt production. The stock tumbled about 8% to $21.86. Well, regulators have decided that MetLife, the nation's largest insurer, is too big to fail and therefore subject to extra oversight. The company says it's disappointed with being labeled systemically important because the classification will harm competition, among other things. Shares, nevertheless, up 4% to 54.03. Well, some big Hollywood names are blasting Sony Pictures after it spiked its controversial movie, The Interview, following unspecified threats against theatergoers by hackers. As the cost of the studio mount, is Sony setting a dangerous precedent by giving in to those threats? Julia Borston has the latest.
Sony's not just pulling The Interview from theaters, it's not even planning to release it on video on demand or DVD. Posters being taken down at theaters across the country, while Hollywood is reeling.
I think this is really a very dark day, not just for the movie industry, but for America to give in like this.
Judd Apatow tweeting, "I think it is disgraceful that these theaters are not showing the interview. Will they pull any movie that gets an anonymous threat now?" Jimmy Kimmel tweeting in response to him, "I agree wholeheartedly. An un-American act of cowardice that validates terrorist actions and sets a terrifying precedent." Steve Carell tweeting, "Sad day for creative expression. Hashtag fear eats the soul." This as Carell's movie with Gore Verbinski, tentatively titled Pyongyang, has been canceled by Fox and New Regency in light of the threats. Canceling the interview will cost Sony an estimated $90 million. The film's budget was about $44 million, with an estimated $45 million in global marketing costs. And even if Sony can cancel TV ads, it'll likely just be shifting that commercial time to its other holiday release, Annie.
I think what they're doing right now is they've realized that it probably will be more financially advantageous for them to take this, do the insurance write-off, and just take a loss, because even though this film would have probably been the biggest premium video on demand title in history, it still wouldn't have covered the $44 million they spent and the tens of millions of dollars they spent to promote the film.
Sony's also looking at as much as $100 million in other costs from the hack, including rebuilding its network and now 3 class action lawsuits, plus the cost of managing employees and former employees' stolen personal information, including social security numbers. And then there's the reputational damage to Sony and its executives, suffering from the leak of embarrassing emails. For Nightly Business Report, I'm Julia Borston in Los Angeles.
And now to another dark side of technology, what's often referred to as the Wild West of the Internet. Websites that sell illegal drugs, guns, and stolen credit cards. Law enforcement is cracking down on these black sites, but business is still strong. Josh Lipton takes a look at this underground economy.
Those looking to buy illegal drugs no longer need to find dark street corners. Now all they need is an internet connection. There are websites that sell every narcotic imaginable, as well as firearms and services such as computer hacking. The sites can attract hundreds of thousands of users and pull in millions of dollars in monthly sales. Here's how these sites work. Users first download and install a browser called Tor. The benefit of this browser? It masks the identity of users, allowing them to search the internet in secret. Once they're on the sites, the buyers, using the digital currency Bitcoin, connect with dealers who ship narcotics in vacuum-sealed packages. Law enforcement is working hard to shut down these sites. Just last month, a joint global operation involving the FBI shut down dozens of these so-called dark markets. But this morning, Digital Citizens Alliance, a nonprofit that tracks online crime, released a report on the state of this underground market. Bottom line, business is still brisk.
It took a major blow. The total number of listings has taken a significant hit, but we've seen that it is growing and that it will continue to grow, and there will continue to be large players in this space, and there will continue to be new websites that pop up offering the same types of drugs and services.
There are still 52,000 items for sale across a range of these websites, from cocaine to fake passports, according to the report. One site in particular is enjoying explosive growth. It's called Evolution. There are 27,000 items for sale on that site, with a large section devoted just to identity theft. It's unclear who runs these sites, but we do know they can make a lot of money. One site, called Silk Road 2, appears to have generated $6 million in monthly sales before it was shut down. Analysts say the U.S. government has had a significant impact on these dark markets, but it remains to be seen what kind of long-term impact Uncle Sam is really having. The FBI did not respond to repeated requests for comment. For Nightly Business Report, I'm Josh Lipton in Silicon Valley.
Coming up, a classic toy will once again be made in the USA after being outsourced to China for decades. That story next. Sort of year-end bonus for people looking to buy a home or refinance their current mortgage. Rates on long-term loans fell to the lowest level of the year this week. The rate right now on a conventional 30-year fixed-rate loan, 3.8%. Well, like ships passing in the night, negotiators say they are no closer to reaching a deal to end the 7-month slowdown at West Coast ports. Talks resumed today between union dock workers and shipping lines and terminal operators at 29 West Coast ports from San Diego to Seattle. But a rep for the shippers says there's, quote, a wide gap in talks for a new deal with 20,000 West Coast longshoremen. Well, a different story for deliveries through Amazon.com. For an $8 fee for Amazon Prime subscribers, the online marketplace is offering 1-hour delivery on thousands of items in some areas of New York City. You'll never make it in the traffic, guys. Deliveries within 2 hours is free. Well, over at the U.S. Postal Service, today is the busiest package delivery day of the year, thanks to a surge in online shopping, of course, and an aggressive campaign to take on its private sector rivals. So will the Postal Service deliver the goods? Morgan Brennan has more.
The U.S. Postal Service is on track for another record holiday season, with package volumes already exceeding forecasts.
It's just a lot. We've been working really hard, overtime and everything, just to get them delivered.
The USPS expects to move more than 26 million parcels today alone, 12% more than its busiest package delivery day in 2013. Last Christmas, when an estimated 2 million UPS and FedEx shipments were late, the Postal Service didn't have the same issue. One reason, a Sunday delivery partnership with Amazon in key markets.
Thank you.
This season, that strategy has been expanded, with the USPS delivering Amazon and its own priority mail packages every Sunday in major markets since mid-November.
It helps us get the workload out before the Monday volume comes in, and most people are home or not coming from church during the days. And we believe at least 95% of the packages delivered on Sundays.
On a typical Sunday in December, the trucks here in the Newark, New Jersey area make about 2 delivery rounds apiece. Overall peak volumes are so high, in fact, that U-Hauls have to be rented to handle the additional capacity. Packages have become increasingly important to the Postal Service, which doesn't use taxpayer money to fund operations. It's a fast-growing business that's now offsetting the decade-long steep decline in first-class mail, the agency's biggest and most profitable segment. To grow its package business, USPS has been targeting FedEx and UPS customers, slashing prices on priority mail services and capitalizing on its relative success last Christmas. But it collaborates with them as well. In addition to its own priority mail service, the USPS does something called last mile delivery, taking on the last leg of shipments for UPS and FedEx. Like its private sector counterparts, the USPS needs to get this season right, even if it means deliveries on Christmas Day.
It's a job for me, but it means something to me because I like customer servicing and I like to see people smile, and everyone loves to get packages. I feel like an elf. Good morning.
For Nightly Business Report, I'm Morgan Brennan in Belleville, New Jersey.
A beloved toy that's delighted kids on Christmas mornings for nearly 100 years is now returning to the U.S. after being manufactured in China for the past 6 decades. So will being made in the USA boost sales? And does where a toy is made really matter to consumers? Courtney Reagan has the story from the Lincoln Log factory in Burnham, Maine.
Lincoln Logs is among the most iconic American toys. But for the last 60 years, the wooden toys have been made in China. Not anymore.
And over the last 4 years, although we had some fits and starts, we moved the Lincoln Logs production back to the United States with Pride Manufacturing in Maine.
We operate within a 250-mile radius, pulling in wood a little bit from bordering states. We've matched colors. We've got the spec right, the strength right. It's just, we're ready for 2015. And Pride's ready and Connex is ready.
Consumer Reports says given the choice between a product made in the U.S. and an identical one made abroad, 78% of Americans would rather buy the domestic version. And they're also willing to pay more. But that's not an issue for Lincoln Logs.
With us, we don't give them that choice. We make sure that it's the same price as it was before. It's on us to deliver the value and deliver the customer experience and to deliver the price-value equation.
While many children have made Christmas wish lists on apps full of digital toys like iPads, Connect CEO Michael Ayrton says total U.S. retail toy sales have remained around the $22 billion mark over the last decade. And he believes there's still strong demand for non-digital imaginative toys like Lincoln Logs. And Pride Manufacturing says he's right.
That iconic name, Lincoln Log, meant a lot to the people. And the fact that it was going to be U.S. made again generated or sparked a lot of interest in the people.
Families with discretionary income who are buying things during the holiday season, like ours, especially for young children, love to buy things that are made in America. And there is no more powerful brand in the world than Made in the USA.
For Nightly Business Report, I'm Courtney Reagan in Burnham, Maine.
And finally tonight, a recap of a blowout day on Wall Street with the Dow notching its biggest one-day gain in point terms in 3 years, extending Wednesday's gains after the Federal Reserve indicated it was in no hurry to raise interest rates anytime soon. 421 points, that's what the Dow added today. The NASDAQ up 104. The S&P rallied 48. And that'll do it for Nightly Business Report for tonight. I'm Tyler Mathisen. Thanks so much for watching. Have a great evening, everyone, and we'll hope to see you right back here tomorrow night.
Nightly Business Report has been funded in part by
TheStreet.com and Action Alerts Plus, where Jim Cramer and fellow portfolio manager Stephanie Link share their investment strategies, stock picks, and market insights. You can learn more at TheStreet.com/NBR.
I'm Tyler Mathisen with a Nightly Business Report news brief. The Dow had its biggest surge in 3 years today, up more than 400 points, extending Wednesday's rally following the Fed's decision to keep record low interest rates right where they are and being in no hurry to raise them. Here's the final tally on Wall Street today. The Dow up 421 points. That makes for a two-day gain of more than 700 points. The NASDAQ added 104. The S&P jumped 48. But the slump in oil resumed. It closed at a 5.5-year low of $54 a barrel. Regulators have determined that MetLife is, quote, systemically important to the economy and thus subject to more oversight. Mortgage rates, lowest level of the year this week. The rate right now on a 30-year fixed loan, just 3.8%. And tune in to Nightly Business Report here on your public television station.